Hello traders, and welcome back to another video. And today we'll be talking about supply and demand zones, a very popular topic, a very popular idea that many traders use to trade with. So we'll go over how to use them in your trading. And this is what we're going to cover. We'll just talk about why these zones matter. We'll go over how to find good zones to trade with, good quality ones, and how to use these zones with your trading strategy. So let's start. Okay, so here we have a daily chart and we have a market movement, and we have some supply and demand, or they are also called support and resistance areas or zones, drawn up. Now, why do we look at these zones? The reason is because many traders who are technical traders look at these zones, at these areas, because they're focused on buying and selling. And the reason they're focused on buying and selling is, of course, because technical analysis says that when price reaches an area that it's been before, that is where it's likely to move off of again, and therefore it's an area of interest. So if price has created a level and now it's coming back to the same level before, many traders would be looking at that area. And the same thing over here, many traders will be looking to buy because this is an area of interest to them. So whether it's supply, demand, buying or selling, support and resistance, this is where many traders look to place trades. And because of that, that means that in these areas we have liquidity. And liquidity are people's orders in the market. And that means that when it comes to these areas, we can expect that there will be orders there. Therefore, there will be money sitting in the form of orders above or below or around these areas. And therefore, this is usually an area of interest. So, price will usually go to or near these areas, and these are the areas of interest where trading is of higher probability. In the middle here, we may not get the same kind of action, but because most traders are looking at those areas then of the extremes and supply and demand and those zones and areas, that's where the action usually happens. The market can become more volatile, it can slow down, speed up. As you can see here, it starts ranging here. As it reaches, it starts ranging. In this case, we had a lot of volatility here. Okay, so this video is called The Truth About Supply and Demand Zones. So here's the truth. Not every zone, not every area is created equal. Just because price has been here, it does not mean that if you buy here and you look to take your profit here, or if you decide to sell at this area because this was the zone, the price will come shooting straight down. That is not how it works, and this is the mistake that many people make. So these zones are not all equal. They're not going to react in the same way. Just because price has moved off this level and it comes here again, it doesn't mean it's going to do that here again the third time. In this case, in the future, if you're looking to sell here, it could very well shoot up, it could start ranging and becoming volatile. We don't know. The trick is to pick, first of all, the correct zone and area, and secondly, a very high quality one, not just any zone, not just any area. And that's what we will go over in a minute. The other thing is that many people, they look at the zones, they try to draw these zones everywhere that they see them. And when it comes to trading across different time frames, it becomes confusing. So for example, many people will draw this zone, then they will see another zone here, then they will draw another zone here and here, perhaps another one here, another one here. So it becomes very confusing and very cluttered, and now as a trader you don't know which one of these zones you should be really focusing on, and it could be supply and demand here as well. It gets confusing. So not all these levels are what they seem to be, all these areas. And the way to actually do it is to focus only on the very best ones. So let's do that. Okay, so now we've cleared the chart, and what we've done is we've gone to the monthly time frame, and the way to find the better quality zones, the better quality areas, is to only use the higher time frames. So we got monthly, weekly, daily, and perhaps the 4-hour if you are trading intraday. So let's just remove this and let's identify some zones which are obvious. You need to go for the ones that stick out in front of you. Don't go for anything which is not clear. So let's go for the clearest ones. So we have one here, it's quite obvious. We have another one here where we see multiple contact points. Then we have another one clearly here, and there's an obvious one there, and there's also one here. So this is the monthly time frame. We can do it on the weekly as well. We've more or less identified the weekly here, the obvious ones. We can look at the daily for a tighter picture, and it looks like on the daily we can do one more right here. Okay, so this is really more than you need, and this is what you can work off with when you look to enter trades. Another point to note, if you notice as you mark your zones on the monthly, on the weekly, and on the daily, you will notice that some zones coincide, meaning the zone is obvious both on the monthly and the weekly and the daily. So in this case we have this zone here, and this zone right here, which is clearly visible and clearly stands out on all the time frames. The other point is that we want to see either a very, very obvious spike, obvious point that is sticking out. In this case it's this level right here, which we can mark with a zone. Either that, or we can also do, when we look to trade, that is mainly for reversals when we have these extremes, but when we trade continuations or retracements in a trend, what we need to see is we need to see at least 4 contact points where the zone goes through on both sides. So we can see here we have 1 on underneath, 2 here over the top, and we have the 3 and 4 over here. So this is the level that you would want to pay attention to. So let's go through an example now. Let's identify this one. Let's say we are now trending in this market. We're looking to place a sell as a continuation of the trend. We've identified our zone that's been respected multiple times. So in this case we have many times, so it's a very strong zone. Let's say we have, if it's part of your strategy, drawn a fib level and that coincides, and we also perhaps drew other patterns. Perhaps you have, let's say, an Elliott wave, or some people draw other patterns, whatever your pattern is, perhaps a correction wave, whatever your strategy tells you, whatever's in your checklist. And now you've identified that we are interested in this area here. Now, just because this is a zone, this is a supply and demand or support and resistance zone, does not mean that the market will go flying in your direction straight away as soon as it hits the zone. Ideally, the best thing to do would be to wait for the market to break through that zone, create your reversal pattern, whatever it's going to be, and then when you have your confirmation price action, that is when you want to enter the trade. So if we just have a look here, if you just entered right on the zone, then and placed your stop loss above the swing, which most people do, you would have been stopped out. So here we can see what we actually want to see is that the market breaks through that zone, because there's money sitting at this zone. Other traders are placing their sells, which means they have their stop losses above, and therefore we want the market to take out those stop losses so that we can have the market go to the sell side, to the downside, once the sellers have capitulated and we come in with new selling. So after the market has broken out, once you see your pattern, then you can enter that trade. So the supply and demand levels go together with your other confluences, your other reasons for the trade. In this case, it took a little while for the trade to play out, but it did play out. And that is how you use supply and demand zones. So thank you for watching, and you can now start practicing you by yourself by finding good quality zones on your chart and incorporating that into your trading strategy. Good luck in your trading. Trade safe.